news. Wall Street awaiting Apple's results right now after stocks rocket ahead for the second day in a row thanks to strong earnings reports from other big companies.
Indeed, and it is hard to imagine that these same indices just tanked only 2 days ago after S&P downgraded its outlook on U.S. debt. So should we still worry about S&P's warning amid the recent rally?
Our next guest says we're bordering on a catastrophe. It's his word, despite what the market did today. Joining us now in a Fox Business exclusive, Reagan Budget Director David Stockman. That's a strong word. Catastrophe, David.
Well, I think it's right. Monday was a wake-up call. But since the market has the attention span of a 2-year-old, I'm not surprised that we're back to dream walking and delusions within 2 days. But that doesn't change the fact. We are borrowing 43 cents on every dollar we're spending this year, $6 billion a day, and it's only been made possible by the central bank around your corner, the Fed. It's been buying all the debt the Treasury is issuing. Unfortunately, in June, QE2 stops. The Fed rigging of the bond market stops. Japan is already out of the bond market because they've got a major catastrophe they're dealing with at home. Now, what happens when all of the central banks of the world stop buying the bond? That means we're going to be back to real investors like PIMCO, for example, that we learned just last week is actually shorting the Treasury bonds, selling it. So I think
mechanically, by the way, mechanically what it means when the government stops buying debt is that interest rates have got to go up, right?
Absolutely right.
And that hurts growth and that hurts investment. And you think that might hurt the corporation's bottom lines, but don't investors know this?
Well, I think they do, but I think they're ignoring it. I think they're ignoring what I call the mighty bid of the central banks. Bond prices are much higher and yields are much lower than they would be in a real market. But when that buying stops, interest rates are going to start to rise. The Congress is going to have to confront the debt ceiling. We're going to have a perfect storm in June where we can't get a majority for anything, and yet we're out of debt ceiling. And in that instance, also, the Fed will be out of the market. So I think at that point, we're going to begin to look at the real world in front of us. And it's a world, year after year, of rising interest rates because of the massive borrowing and because of rising taxes because the politicians haven't been honest with the public.
But what we saw was extension of Bush tax cuts back in November. Was that the right move in retrospect?
It was totally a mistake. It was a short-run fix, a shot in the arm.
Because you had a lot of people on the Republican side and some on the Democratic side saying we needed to do this right now for the psychological, or you say maybe a fix, but you say it's also the wrong thing to have done.
Of course, because we're doing it over and over and over. The idea we should take out Uncle Sam's credit card to give billionaires or millionaires or even $100,000 a year people a tax cut that is simply funded by borrowed money that somebody's going to have to pay, our children, our grandchildren, and beyond, makes no sense. It shows that we have the time span as a country of the same 2-year-old that seems to be running the stock market.
I could argue with you for an hour on this, as President Reagan often did with you, but the debt ceiling, you brought it up. If we don't hike the debt ceiling, Tim Geithner says we go automatically in default. Is that true?
Well, I think technically it's true. I think
it is true that default is the because Don Marin and others say no, you have plenty of options before you go into default.
Well, it's a question of when you get there because they have all kinds of tricks in their bag at the Treasury where when you get to the midnight hour, suddenly they'll find $10 billion more they can release from a trust fund or whatever. But at some point, the cupboard is going to be empty, and at that point, we're going to have to raise the debt ceiling, and then there is going to be a thundering conflagration politically in this country because there's such profound difference between the parties and so much unrealism about what we need to do.
The president is about to give a speech to the Facebook and Silicon Valley crowd, usually wealthy folks, and he'll talk about raising taxes on the wealthy. How do you think that'll go over? And do you say, well, who cares how it goes over? It's something we need to do in conjunction with more cuts in spending.
Yeah, it should be in conjunction with more cuts in spending, but I think he should be telling the wealthy, your taxes are going up, but by the way, so are the taxes of everyone else.
The question is in what way they go up. The commissioner that is responsible for the president's own debt commission said, get rid of the deductions and lower the rates. Is that a way to do it?
It would be a nice way to do it in the perfect theoretical world. But who is going to volunteer to have their health care deduction eliminated, their home mortgage deduction eliminated, their child care credits eliminated? In other words, I think it's just another one of the illusions that they toss around in Washington because they're afraid to tell the people that austerity is coming, pain is going to be imposed both in benefit cuts and in higher taxes, unless you think that we can keep printing money at the Federal Reserve at this enormous rate without blowing up the system, and I don't think we can.
Somebody's spending, we've got to